Welcome back. Well, merger and acquisition activity has been slowing down, according to a PwC report that tracks global trends in the space. Overall transaction volume slumped at 30% in the first half of 2024 as the macroeconomic environment proved too tough to operate in. And joining me now as we map out the outlook for the second half and unpack deal making here at home is the CEO of Deal Leaders, Andrew Bahlmann. Thank you so much for your time, Andrew. Of course, no secret to all of us how tough the economic environment has been, particularly for the first half of 2024. Just, shed some light on how this kind of sink or swim environment for companies has influenced the M&A landscape.
Thanks, Sonati. Yeah, so it's an important analysis one has to do relative to the rest of the world. I think we have had our own challenges in South Africa, and we know from an economic growth and development perspective, there's been significant pressure on most businesses. That being said, there's challenges in the rest of the world as well. So, the PwC report comments that there's a 30% drop in M&A activity in the first half of this year. It doesn't necessarily mean that it's dead. And I still think, we've seen a lot of activity up until now that's been very buoyant. So I guess one has to look at specific industries. I think there's been a slowdown in some of the mega deals. So I think that's typically something that's going to be driven by a stock exchange and valuations, in the open market, as well as obviously there's elections and sentiment underpinning all of that. So yeah, look, there's lots of uncertainty still, but I think, we're hoping to see a little bit of a clawback in the next 6 months.
Well, talk to me about some of these industries where it seems that activity has actually remained quite buoyant in this kind of environment.
Yeah, so it's an interesting one. I'd say, resources is definitely one. So when we talk resources, not necessarily the primary assets, but mining services as a whole has been very, very buoyant. I think, irrespective of the commodity cycles, there's always commodities that are benefiting or booming and others that, that there's a challenge. So from that perspective, it's been, we've experienced, a lot of demand and growth locally and internationally. On the industrial side and the manufacturing side, it's quite interesting because we've seen an uptick in the last couple of months, I think because of rand weakness, as well as logistical challenges from the Far East. So all of a sudden, a weaker rand seems to be positioning some benefit to, I guess, some of those globally competitive at an efficiency level manufacturers. And then I think there's going to be bits and pieces. I think exportable services is something, as well as, IT and fintechs, always something that's quite attractive. It just depends, where in the value chain you sit and, relative to the rest of the world in demand, whether your solutions are monetized or not.
Well, actually, it's quite interesting, Andrew, because I would think that, with some businesses particularly the smaller businesses, experiencing a little bit of short-term pressure on their balance sheets where they are struggling in this cycle, that I would think that bigger companies would actually be pouncing on them because they'd be looking cheap. Has that not been the case?
Yeah, look, there's definitely examples of that, and I think that comes down to, you are right. I think smaller companies have been weathering a storm through COVID and since COVID with the economic conditions. And if they're heavily geared on their balance sheet, they do become quite an attractive target because obviously profitability could be lower. I think it's a situation of, do you want to have 100% of very little or a smaller percentage of something really big and be open to an acquisition and a growth strategy? So there's definitely a lot of buyers out there looking for, for good deals, for cheap in inverted commas assets, because unfortunately, based on the pyramid, there's and the conditions out there, there's quite a few of them.
And actually, just on that note, that you make, that there are a lot of buyers that are looking for cheap assets. What actually do buyers need to be looking out for when they are seeking out, an acquisition, considering that you could get to a place where a company seems cheap, but it's probably a value trap?
Yeah, look, it's a really good point. I think ultimately, buyers are looking for growth, and that growth could come through either synergies, markets, channels that they bring themselves, or untapped opportunities within those targets because those companies don't have the capital or working capital to capitalize on those growth opportunities. But it's very, very risky, and I think that's where you'll have certain businesses, PE funds and acquirers that also specialize in more distressed assets. because they understand where the right value, underpin is. And then you get others that focus more on going concern and exponential growth from there. But it can be a trap. You spot on it, and buyers have to do their homework very, very carefully.
Yeah, and actually, obviously, I want your thoughts on maybe what we could see in the second half of 2024. I understand that this may just be a blip in market that will bounce back. What will a healthier level of M&A activity hinge on going forward?
Yeah, look, I think hopefully the positive sentiment continues. I think one thing we've experienced literally over the last probably 7 or 8 years, particularly the international market, they don't have a preference. They just want certainty. So hopefully with the GNU now, and we know there's going to be challenges, but hopefully that sentiment can continue. I think the big focus on reduction in load shedding and the likes, and hopefully this renewed focus on logistics, I think will drive infrastructure, which clearly underpins the economy along with mining. So yeah, I think I'm hoping I've always been very positive. I'm hoping we've bottomed out, and it's going to incrementally get better now. But when we saw the activity even through the dark days, there's definitely an uptick now, and we still are a window to Africa. And I think because of the risk profile of the rest of the world changing and probably closing in on our risk profile, I think we're going to become more and more attractive over the next short to medium term.
All right. Well, thank you so much for your time and giving us insight on what is happening on the M&A landscape. That was the CEO of Deal Leaders, Andrew Bahlmann.